Good morning. Good afternoon. Good evening. Hello, hello from wherever you are. Hope you're well. Hey Diana, how are you doing? Good to see you. Hope you had a good weekend. I'm doing great. It's back to Monday, so I'm doing fantastic. The weekend felt super long. It felt like a long weekend. I don't know why, but I'm glad that it's Monday again. Hey Jack, how are you doing? Hey David, good to see you. Good morning. Alrighty, everything seems to be working. I can't seem to send messages on trading.live, so I hope everyone on trading.live is doing well. Hey Ted, good morning, good afternoon. Yes, Diana, I saw the pictures about the flood. I was wondering, was it really being flooded that way? But I guess it was. Hope everything's okay on your end. Hey Ted, hey Eggwano, how are you doing? Good morning. Hey Jimmy, hey BL. Hope you're all well. All right, a quick risk disclaimer. Any information contained on this webinar should not be construed as advice and is presented as educational material only. The contents of this webinar are not intended to be a recommendation to trade a financial product. So please remember that your objectives, financial situation and needs has not been considered, and you should consider its appropriateness to your circumstances. All right, and if you are new to the session, you're joining us for the first few times, please drop a message, say hi, let me know that you're here, let me know where you're joining us from. For all the regulars, a big welcome back. It is a brand new week, so we'll see what's in store for us for the week ahead. On Friday, we did our analysis, pretty much everything went against us as the dollar continued to weaken, but no trades were triggered on Friday, so it was a relatively boring session for me. If you did get into any trades, do let me know, put it into the chat. If you haven't already, do click on the Discord link and join us on Discord as well. And if at any point in time you do have a question, put it into the chat, let me know. And you help me out massively by clicking that like and subscribe button so that we can get more people onto this stream that I do almost every day. Absolutely for you guys. All right. Now, not that one. Hey Erwin, how you doing? Hey Pips Apprentice, good to see you. Hey Hikers Diary, how you doing? Usually takes 25 minutes to drive to work, no more than 2.5 hours. That's crazy. That's a long time to spend in the car. 2.5 hours just waiting in traffic. That's terrible. Well, I hope the weather's better in Dubai. I hope the flood is, I'm sure the flood is gone. I hope it's all back to normal now for you guys. Okay, Jimmy went the opposite, so I had a few good trades. Very good. There were actually a lot of good trades to be had if you just went, together with that dollar weakness scenario. But I'll tell you more about that as we go through the charts. Okay, hey YB in Investments, how you doing? So, what happened on Friday? Let's go back and see. All right, not a lot of things happened on Friday. Right, we were talking about this, not a lot happened on Friday, but what we did see on the dollar index, I was expecting it or anticipating for it to break above that 38.2 level to head up towards that 61.8 level, but that did not happen. In fact, what actually happened was right after our session, I'll zoom in a little bit more. There we go. Right after our session, the dollar index rejected 38.2 and continued to the downside, right? It continued pushing lower, breaking down from that 104 support level that we saw, held 3 times very recently. So now that support has turned into a resistance level. It continued lower, hit that 103.55, almost slightly below 103.55 early this trading session today, before bouncing back up slightly right now. Okay, so the question now for today would be, and moving forward for the week, would be, would this dollar index continue back up, or would it sit around there and push back down? Okay, with the way the dollar index is trading, or has been trading strongly to the downside, I would anticipate that, you know, we might see that push lower. I'm not going to be thinking, or I'm going to resist the temptation to try and guess that the dollar index is going to retrace further higher up before turning back down. I think that we might see it sit there and push back down. Why do I think that? Main thing is that we saw what happened, or we saw that nothing much happened on Friday, leading to that continuation of that downtrend on the dollar index. So looking at it today, nothing much, right? Nothing much at all. That's why in the Discord channel I was telling you guys that it might be a short and sharp session today, because not a lot of news for today. Even from now till 7 p.m. only do we see the German Buba monthly report. Just nice, we had Buba turn up, Muhammad Buba turn up and say good morning. So how are you doing, Buba? And hey Desiree, hey Gerju, good to see you all. Is it Thanksgiving? That's a good question, David. I have no idea. It should be on that one there. On the 23rd of November, on Thursday, is Thanksgiving. So not Thanksgiving yet, but it is coming up. We are going to have Black Friday sales coming up as well. Okay, but back to this is today, not a lot of news. But following from this, tomorrow at 7 a.m. we do have RBA Governor Bullock speaking at the State of the Economy Annual Forum at ASIC, and followed on with the monetary policy meeting minutes from the RBA at 8:30 a.m. GMT plus 8. That's going to be interesting. Okay, we'll see what we can predict on that, on the Aussie dollar later on as we look into the charts. But after that, for tomorrow, I'll tell you more about the CPI data that's going to be released at 9:30 p.m. GMT plus 8. Yes, Diana, it is a good time to upgrade or to maintain your TradingView account on a premium. You can see that I am on a premium account. I will be sharing with you guys, I think there is a referral link. So if you guys are planning to sign up on TradingView to get onto premium or to get onto whatever levels, I'll send you my referral link. Make sure you use my referral link. Gets me some coins. I don't know what the coins are for, but it gets me some coins. All right. Now back to the main business. Where do we think the dollar index is likely to head towards? Today is the 20th of November. Dollar index is at 103.73. We do have slight retracements at the current point. I don't see it retracing up to 104. Maybe. when there's no news and it's bouncing off a strong level. Let me just check on the other news for this week. We do have FOMC meeting minutes for the US, consumer sentiment, PMI numbers for the Eurozone, for the UK on Thursday, holidays in the US on Thursday, and then Friday, PMI numbers as well for the manufacturing and services sector for the US. Okay, so now back to the charts. I was saying that I don't anticipate it coming back up too much. But if it breaks above 23.6, we could see it come up. So that's the question, right? Is it going to go back up to here and turn back down? Or is it going to sit around this level before pushing lower again? I am going to, where's my line? I have 103.58 there, checking the H4 time frame. This was the level that we saw on the 1st of September before it shot up. Okay, that's on the H4 time frame. Now back to the H1. I'm actually thinking that it's going to sit around this level. Right, so I'm thinking that it's going to sit around this level. Dollar index looks like it could consolidate along between 103.50 and 103.70. I realize I've been having a lot of typos, so thanks for pointing it out, some of you guys, and for bearing with me on that. So I think that it's going to consolidate within this range, but the main thing is generally I'm looking for further downside on the dollar towards the 103 level, right? So I'm still anticipating further downside to 103 support level. All right, so it's either going to bounce back up, test that 50% and that 104 level before turning back down, or consolidate at this range before turning back down. Ultimately, I am looking at the further downside for the dollar index, just to continue on with the trend that it has been on since the 1st of November. You see that it's set in that horizontal, not really consolidation, that horizontal fashion, right? Filled at 107 and started trading lower, bounced back up a little bit, starting trading lower, bounced back up a little bit, and now it looks like it's going to sit there a little bit before trading lower again. So that's what I would be looking out for. Consolidate along this range before pushing lower. So let's take that one away for now. Okay. Hey D-Train, how are you doing? How much is the Black Friday sale for TradingView? I have no idea yet. Yeah, no idea yet. So I think they will be publishing that or sending out the email on that. Hopefully pretty soon. I'm waiting for the numbers to come out so that I'll sign up. All right, Mizio Delaros, how are you doing? May the pips be with you all too. Hey Ayakame, good to see you again. So I think that's going to sit there, and further weakness to the downside on the dollar index. That looks fair. Then, so that was the Kiwi dollar, which did not get triggered on Friday. We still have 61.8 forming up. What's very interesting here on the Kiwi dollar is that that's a good resistance level now. I'll change that to a dotted level right? So why I'm changing that to resistance is because you can see that it's tested several times, very strong level that failed to break. And why I changed this to a dotted level is because although we do have this point here that it failed to break, all the other times it pretty much broke through that quite easily. And I just want to note that it's 0.6 as a nice round number support level. Okay, so it's approaching that resistance now. The thing that I'm watching out for, right, and why I hesitated a little bit here on the dollar index, whether it's going to bounce back up or push lower, is because the Kiwi dollar is approaching a very strong resistance. We saw that reject on the 29th, on the 11th of October, on the 15th of November. It's coming right up to that point again, right? And if it comes up here, test and fails, then you're going to see it as a quick double top formation with likelihood to push lower to the downside, right? Keeping it within this range. So that's what I'm looking out for here on the Kiwi dollar. It needs a reaction at 0.6050. But because we are anticipating a weakness on the dollar, it's bouncing back up a little bit, but because we're anticipating weakness on the dollar, what you could have here on the Kiwi is either it breaks above, so 0.6060, what's my dotted line here? That's fair, but I like that one more. Okay, 6060, I would have a 70 pip take profit out of a 25 pip stop loss for the upside. Or if it rejects that resistance at 6050, then you could be looking to sell down 6030, stop loss again tight at about 20, take profit down to 80 pips. Main thing is a reaction there at 6050. Okay, so here on the Kiwi, we're looking for a reaction at resistance of 0.6050. We could look to sell or look to buy at 0.6060. Stop loss 20, take profit 70, or we look to sell at 0.6030, stop loss 20, take profit 80. But we're looking, main thing is we're looking for that reaction at the resistance of 6050. So I want to see it come up, test this level, and then if it breaks through, we look to buy it up. If it rejects, we look to sell it down. There is a level of flexibility there on the Kiwi dollar. Okay. Could you explain how do the dollar index relates to our trading decision? Okay, so Hiker's Diary is asking about how the dollar index relates to our trading decision. Basically, the dollar index is made up of a basket of, is a weighted average of a basket of different currencies, right? So most of it is made up of, a big proportion of it is the euro dollar. Let me see, I can bring that up. There we have it. Just one of the examples here, right? Dollar index is made up of 57.6%, euro 13%, yen 11.9%, pound. It's not always the same, depends on who's calculating the dollar index. So, you know, 9.1 Canadian, 4.2 Swedish, 3.6 Swiss franc. So when you view the dollar index, whether it's gaining strength or weakening, basically what you're getting an idea of is how is the US dollar performing against a basket of currencies. It gives you the general view of, is the dollar getting stronger or is the dollar getting weaker against a basket of currencies? Because sometimes you might be seeing the dollar weaken, right? The dollar index pushing to the downside, for example, and then you see the Kiwi dollar pushing down as well. So it might be, yes, dollar index is weakening, but Kiwi is getting even weaker than the US dollar. That's why it's pushing lower. So you want to use the dollar index to give you an idea of the strength or weakness of the US dollar, because everything we're trading against, or most of the things we're trading against, is against the US dollar. So it's important to know the strength or weakness of the US dollar. Okay, hope I answered your question there, Hiker's Diary. Okay, that one's done. So now looking at the Aussie, again, that did not trigger, did not come down. 38.2 held, 61.8 did not figure into the scheme of things. Now pushing up towards this previous high here at 6585, next level at 6623, right, or even 6630, almost 6630. So now back to the current. You see a continuation sitting right there. I'm happy with that. I will draw this upwards. You see 38.2 at this resistance turned support level. Earlier today, I was anticipating for the Aussie dollar to retrace before pushing back up. Right, when I came in and it was about that point, I thought it was going to retrace a little bit because of the resistance before pushing back up, but instead it continued pushing higher. Anticipation is that it should push further to the upside. It does have 6650 right there, and we do have the RBA minutes tomorrow. I'll show you this as well. Right, RBA minutes will be interesting. Why I was saying that RBA minutes will be interesting is because just this month they hiked rates again. Right, it was held at 4.1%, but this month they raised it by 25 basis points to 4.35% because of, I think 2 weeks ago, before that, we saw the CPI number for the Aussies climbing to the upside again, right? Increasing slightly again. So that's why the RBA hiked rates. So this or tomorrow's meeting minutes is going to be interesting to see any further comments about why they hike rates, or if they plan to hike rates further, or or whether there's a comment to say we've hiked rates and that's it, we're not going to do anything else. So that's going to be interesting. I think that it might be a little bit hawkish for the from the RBA. So with that, I do want to see a little bit of a retrace. I feel that it's a little bit overextended. Right, you see that it is slightly overextended on the RSI. Feels like it might retrace a little bit before pushing back up again. So what I'm looking out for here is for the dollar, Aussie dollar, to probably push back down a little bit before pushing back up later or tomorrow during the meeting minutes release. In that case, what I'll be looking out for, BLCS is looking out for 0.6520. Yeah, I think that it might come down and bounce. So 6.5, I'll go a little bit higher and say 6.540. Stop loss maybe about 25 pips, and take profit you could go up to 80 pips towards that resistance level. It looks like it's going to consolidate, but between a consolidation and a brief retrace, I think we could see it retrace slightly before pushing back up. So in between that 23.6 and 38.2 level. So retrace slightly, push back up on the Aussie dollar, especially if the RBA meeting minutes is going to sound quite hawkish following a rate hike decision this month. Okay, so I'll be happy with that. I was just thinking of the alternative. If it breaks above, so 6.565, stop loss 20, take profit 60 pips to the upside is possible as well. Generally, we're looking for an upward push on the Aussie. So we have that two scenarios, but I like that one a bit better. So 6.540, 25 to 80. Okay, so Aussie we're looking to buy 0.6540, stop loss 25, take profit 80. There we go. And that's where I made a typo on the yen from Friday. That should say, I mean, I'm going to change it in the next second, but it should say 150.30 bounce then buy. But what we're seeing here on the yen, as that dollar weakens, so that did not trigger, we take that away. But as the dollar weakens, it continued to bring the US yen to the downside, right? Dollar weakened, pulling the yen, the US yen lower, right now below that 150 level, right? Below this 150 resistance level. Question a lot of people will be asking is, does this mean that the US yen is out of that danger zone considering it's below 150? My view, quite likely, especially if we see the dollar continue to weaken, that might pull it lower, right? Let me do this to highlight that 150 region. 60% actually in this case has 61.8 has broken, so we can actually take that away. This dotted line we have actually corresponds to those levels there. Diagonal trend line to the upside, well broken, so we'll keep that to this point here. It found this low that we saw on the 31st of October, and it bounced quite strongly. So now if I'm looking at this on the dollar yen, might retrace a little bit. It could get up to 149.40, but we are looking for further downside because we're expecting that downside on the dollar, right? So we were thinking either that or consolidate and push down. Could retrace a little bit back to this level. Could retrace back to 149.40, about there, before pushing lower again. Yep. Okay, so that's what I'm thinking. It would look a bit like that. Right, it look a bit like that. So if it fails to break above 149.33, we could look to sell down. But okay, so one more aggressive view is 149.25. You know, stop loss 25 pips, take profit almost 90 pips to the downside. That could be a view. I think a safer one would be to look for it to break below 148.85. Stop loss will be tight, no more than 20 pips. Take profit at 50 pips to the downside. So a continuation to the downside, just waiting for it to break below that low of the candle body. Okay, that's one thought I'm having. You know, why gonna have a little bit more of a conservative view from here, or my point of view moving a bit more conservative, is we are heading towards the end of the year, end of the month, end of the year for sure, but we are heading towards the end of the month. So, you know, for those of you who are in a profit on for your month P&L, this might be the situations where you start thinking of securing the profit, not going for those big gung-ho trades, you know, only entering if it breaks a low and has a big continuation or the continuation to the downside. You know, it's really that security mode, not so much the chasing the pips, chasing the setup kind of scenario right now. All right, so that's how I kind of trigger between my different approaches. Sometimes early in the month or mid of the month, I do tend to be a little bit more aggressive because I want to hit my numbers. Then once I hit my numbers, I'll take my foot off the pedal. I'll look for the more safer setups for confirmation of trends. Okay, so 148.85. 20 to 50. We'll say look for completion of retracement. Sell at 148 dot, we'll make sure I type this properly, 148.85. Stop loss 20, take profit 50. Yes, yes, okay. Look for completion, the completion of retracement, sell 148.85, stop loss 20, take profit 50, okay. Hiker's Diary asks, can we relate dollar index to making trading decisions on gold and other currencies which are not considered to calculate DXY? Yes, you can. Okay, the way I wouldn't use the dollar index as a direct base of making a trading decision, right? So I'm not going to be, it's more like a supportive information rather than the main driver of information. So I'm not going to be buying. So for example, if this dollar index pushes up over the last 3 hours, I'm not going to be selling the pairs, right? I'm still going to be looking for a sustained move on the dollar index before I take on a trading decision. So you can relate the dollar index to making trading decisions on gold, definitely, because there is some level of correlation there, but I wouldn't use it solely. I think that's the word. I wouldn't base a trading decision solely on the strength or the weakness of the dollar index. Okay? Hope I answered your question there, Hiker's Diary. And good morning, Bjorn. How are you doing? Right, you can see here, dollar index pushing up slightly, but yet the US yen pushing slightly to the downside as well. So wouldn't use dollar index solely for a trading decision. And also do note that dollar index, the impact of the dollar index does seem to be a bit laggish. Okay, a bit lagging, so just watch out for that. I said dollar index so many times over the last 10 minutes. All right, so pound dollar. Again, that did not trigger. It was a quiet Friday for me. Everything looked like it was going to trigger, bounce back up. Right now, what you would notice here on the pound dollar, on the pound, is that 1.25 seems to be holding quite strongly, forming almost that double top formation. Right, scrolling back, you don't see it that much, but we do see a formation of a double top. Could be coming back down to the support level with this area here. Take that away for now and just move this up slightly. Okay, there we have it. 38.2 held, well, that's fine. What I would be tempted to consider here on the pound dollar would be if we see, if we're wrong and we don't see the dollar weaken back and dollar pushes back up, then we could see the pound dollar trade back down. I would be looking at about 1.2460, stop loss 30 pips, take profit will be down to here at about 70 pips to the downside. I know that we have this level here, but it doesn't seem to be very strong. Right? Apart from how it's reacted on the 19th, on the 20th of September, and more recently on the 6th of November, after that it seems to have just gone past this level quite easily. So I'm tempted to actually ignore this level a little bit more and consider 38.2 here that seems to have held prices more recently. Okay, so I'm looking at a possible double top here below 1.2460. Hey Jamil, how are you doing? Jamil is on a roll on the pound dollar. So yes, I think Jamil probably sold at about 1.2480 or 1.2483, about that. Let me know if I'm right, Jamil. I'm considering a double top formation, 1.2460, 30 to 70. On the off chance that the dollar does strengthen back. Okay, 1.24, I forgot my numbers again. Good one, Jamil. 1.2460. 30 to 70. We're considering this because of a double top formation. Alrighty, that's fine. That's likely to sit there, push down. Okay, I'm happy with that. Let me just check this. And you see that it would have broken 23.6 to head down. You could be looking at it at 38.2, but I feel that it's a little bit too low already. So I'm quite happy for it to be at that point. 1.2460 seems to be fair. Now on to the euro dollar. Broke out, right? We were talking about the euro dollar. Did I write that down? euro dollar was in that range. We were looking, hey, euro dollar with that push to the upside, and then that horizontal range looked a bit like a flag or a pennant or a chart pattern in that sense, and it broke out of that consolidation to the upside towards that resistance level at 1.0940. Now looking like it might retrace down, very similar to what the pound dollar looks like it might do. But I don't think we're going to take too much of a bet in this case that the dollar index is going to recover our bases and say that what if, or rather we have covered our bases, what if the dollar index strengthens? We've got the sell on the pound. Now we're looking at this as a retrace before continuation to the upside. Let me just do that. Take that one away. And then we have that. So 38.2 right there. Okay. 50 is right at that level. Could come back down around this range before bouncing back up. So that's why I was thinking we could see it push up a little bit. What I would be looking out for is a bounce. Is a test and a bounce. So euro dollar needs to stay above 1.0880. We're looking to buy that up. 1.0890. Stop loss 20 pips. Take profit 50 pips to the upside. Right, so let it retrace back down. Looking like it might retrace a little bit. Look for that bounce. 1.0890. If it doesn't bounce it doesn't come as low as the 50, then you'll be looking at 1.0905. Stop loss will be a lot tighter. Take profit about 30-40 pips. Okay, but what I want to do is I would like to see it retrace a little bit more. Stop loss about 20 pips. Take profit 50 to the upside. Okay, I see your question there, Vincent. Let me get to you shortly. 1 second. I'll be looking for this to buy 1.08, not 108, 0.08, 90, 20 to 50. 1.0890, stop loss 20, take profit 50 to the upside. Okay, Vincent is asking what's my view on the pound Aussie. So let's have a look at that. So Aussie dollar, we were looking at it possibly pushing to the upside. It looks like this might be a little bit more of a likely scenario, so watch out for that. So Aussie, we're thinking it might push up. Pound dollar possibly pushing lower, or if the dollar strengthens. If not, then continuation to the upside. So on the pound Aussie, right, anticipating Aussie weakness, or Aussie strength, sorry, to continue. It is sitting right at the support level right now. Broken at that point. That did not happen, take that away. I think the Aussie dollar strength should see this push down. But pound, if that happens, then we're going to see pound dollar strength as well, which might see that push back up. So this is going to be quite a key support level that we've seen being rejected twice now, on the 8th and on the 16th of November. What looks like Iguano is just a scenario planning. So we're planning to say that if the dollar strengthens, then we could be looking to sell the pound down. If it doesn't, then we have the euro dollar that we can trade. So that's why we have a scenario planning there, right? Because we don't want to be sitting around saying, okay, great, dollar weakness all across, and then dollar strengthens, and then we have no trade. So I'm just covering the scenarios on the different currency pairs. So we've seen that it's come down to 61.8 as an area here and held. Okay, this is the pound Aussie again. I think that it could break and come down to this point. I think a little bit more downside, or it's moving already, but more downside on the pound Aussie. So it's moving. It's moving as I'm talking. 1.09 to it's going to move down. I can't. As it's moving, I'm going to tell you where's the entry. It could come down towards 1.8980, but I would be looking at that point where that's going to bounce. Okay, so pound Aussie, I'll be looking for reaction along, more downside, looking for reaction along 1.8980. Yeah, it's breaking the support, the next support, and if it doesn't, if it breaks past that point, then the next support is here at 1.8912 or 1.8910. So we are just a bit over 10 minutes on the hour to close. Way outside Bollinger, might bounce back in a little bit before heading lower again, bouncing a bit right now. So you could be looking at 1.9030, stop loss maybe 40 pips, take profit, could be a good 115 to the downside. Okay, now back to it. We've done the euro. Look at Aussie and see that's why the Aussie is pushing up, but yet the Aussie is pushing up. That's why we see the pound Aussie dropping. Pound dollar sitting right there. I don't think the sell is going to happen. I think it's going to push up. So we're looking for a reaction. We might still see that happen. US Swiss franc, that did not trigger. Take all that away. Take that one away as well. Right now at that support level of 8835. Dollar weakness to continue, is going to push this lower past this support. Zoom right out, you see that if it breaks this support, we do have another interim level here at 8796, but the main key level at 8749. So coming back to the present, break below the support of 8835. We're going to sell down 8825. Stop loss about 25 pips. Take profit 75 pips to the downside. It's a bit odd that we're not seeing as much volatility here on the Swiss franc, compared to what we're seeing here on the dollar index. But anticipating this to push down, we're going to anticipate that to continue lower, continue trending lower. So 8825, 25 to 75. We're going to look to sell 0.8825. Stop loss. Yeah, makes sense. Yes, 8825. Stop loss 25. Take profit 75. Stop loss 25. Take profit 75 to the downside. Let's check. Pound Aussie looks very interesting, so let's check that. Still pushing lower. 10 minutes to go. Give it some time. Then to the US CAD, again that did not trigger, take that away. 61.8 held very strong. We'll keep that. If I tried this upwards, it's right at that 61.8 again. Right, so we can put this right there. It should trade back down because of dollar weakness, but I don't think there is a lot of space there. So if we look at this 1.3690, stop loss 20, take profit 50 to the downside. There we go. Okay, CAD would be to sell because of dollar, anticipated dollar weakness, 1.3690, 1.3690, stop loss 20, take profits 50. Stop loss 20, take profit 50 to the downside. Okay. All good so far. Please remember, help me out, click that like and subscribe button, the little rocket ship button as well if you are on the session. And then on to gold. Right, gold, I lost 2 trades on gold as I was trying to trade it up because I was looking at gold to get above 1990 to climb to 2000 as a nice round number resistance, right? And as the dollar was pushing down, but what we actually saw was gold pushed up, broke above, came to 1992 and then reversed from that point, right? And then reversed from that point. So I lost a couple of trades here on gold, small scalping trades. But the main thing is that it is still on that upward trend. Anticipating, you can see here, this is so odd. This is so odd on between gold and the dollar index right now, and also to Hiker's diary about using the dollar index to drive the trading decision. Dollar index trading lower should see gold pushing up, right? But on the same hour that we're seeing the dollar index print a red candle to the downside, we're seeing gold print a red candle to the downside as well. That correlation should be inverse, but yet we're seeing the same direction. So things to watch out for in this scenario. What I would say is that I probably want to see gold come down, test 1977 or 1971 before pushing back up again. Yeah. So test. Okay. Let's move this up a little bit more. Okay, so gold, I'm looking for a bounce of 1971. A bounce of 1971 to trade back to 1988. So gold, I'm looking for it to bounce or to retrace. Complete retrace at 1971. Bounce of support to trade to 1988. How about that? Bounce of this level to trade to 1988. So I wouldn't go as high. I don't think I'll go that high for now. So I stay within this range. Okay, it might bounce off this trend line, but I think a bit of momentum would see it push lower. And if I took this points, you'll see that it's testing that 23.6 right now. Rather, 23.6 has broken. So it might come down to test 38.2 before bouncing back up. If I took this one here, it would test 61.8 and bounce back up. So I'm quite happy with the idea that it could test and bounce off this level. But yeah, 2000 is quite close, and you see that the upward momentum has slowed a little bit. So I still do see more upside, but like Jamil says, just be careful, it looks a little bit dangerous. Is there a head and shoulder pattern? I guess what you're seeing is that, but the neckline is terribly skewed that way. You would typically say that that's a neckline, but the shoulder is there, so that shouldn't be a neckline. That's more likely a neckline. So yeah, it needs to bounce off the support. If it breaks this level, then we could see big downside. But I think that is most likely going to bounce off. Also because we are looking for the dollar index to push lower. Yes, so gold, very dangerous. We did see a possible head and shoulder, but the neckline, oops, I deleted that, oops. But the neckline is like something like that. Okay. Any further questions? Do make sure you join us on the Discord channel if you haven't already. Look forward to seeing you all there, and Jamil will check if RSI divergence. Let's see. I don't think so. No, I see that. I see that and that moving in the same direction. I don't see a dive. Oh, unless, oops, oh, that's a bit too far away. Unless we're talking about that and that. Could be, but that's already happened. We already saw that. Happened already. Yeah. If not, then for the nearer one, yeah, we saw that. And we saw that retrace back down. Now I'm just looking to see what happens at 1971. And that level of 1971. I think that's going to be a key support level there. Okay, so with that, I'll leave you with that. Please help me out. Click the like and subscribe button. I'll see you on Discord. And if not, then I'll see you all tomorrow, same time, same place, on YouTube and on TradingView. thank you all for joining me on this session. So take care now. Bye bye.